So I just couldn't help myself. I made a video recently about how I spent over £50,000 on the S&P 500, and yesterday I decided to sell it all. So this is my free trade portfolio update for the 4th week of 2023. And even though I make monthly updates, I think this fortnightly update is well worth your time. So without further ado, let's get straight into the portfolio. So in my previous update, I reached a value of £70,000 total in my free trade account. And right now it is £3,000 above that. So I thought I really would give you an update about what I've done. And because this is my main portfolio, this is how I invest. I don't recommend that you copy my strategy because most likely it's going to fail. Like I always say, investing is about personal goals. Most people are there to make money in the short term, which can be fun and good, but in the long term you could be losing out on thousands of pounds. Unless you like taking big risks, which I don't mind and I think it's more thrilling than anything, then please do the opposite of what I'm doing. But anyway, my general investment account has been doing a lot better. So in the past year it is up by £1,493, and of course we all know that we're in a difficult time where people are seeing huge reds in their portfolio. And even though January was a very good month, as you can see, my portfolio over the past month has been doing much better than over the past year. I have made a few decisions that could either haunt me in the long term or actually make me quite happy. So overall, my general investment account is down by £2,636. I'm going to quickly go through the holdings and show you that some of these companies collectively are down by £7,000. So this value down by £2,636 doesn't even take into consideration that £7,000 in loss, meaning that my portfolio overall after a certain point in time has been doing pretty well. And this will be roughly about from November 2021, where I actually changed my strategy and stopped investing in individual companies. And I'm going to show you how much you can lose investing in individual companies thinking that the valuation is always going to keep going up, which is not. So as you can see, Intel down by 50%, not big holdings. World Dividend only one share, so that's up by 4%. CSN is down by 17%, not big holdings, not worth talking too much about. Gap 1.3 shares down by 1%. Xingyuan Real Estate is down by 84%, and that is a loss of £88. Kindra is a free stock derived from another stock, so the plus minus never changes, it will always be plus 0%. Avaya Holdings is one of the biggest losses I've ever incurred, and that is down by £877, so a total of 97.51%. That is a great example of why you shouldn't invest in individual stocks, because even if you go by their graph, so past performance is definitely not an indication for future performance. They were valued hugely during after pandemic times, and now they're worth 32 cents. Over the past month, they've been as low as 15 cents. So this company could easily be bankrupt. So I highly don't recommend actually investing in this. Although if you do like high risk, there is a possibility, maybe depending on how the company goes, that this penny stock might become, 10x or even 100x. So take that for what it is, but I don't recommend investing in Avaya Holdings. Rolls-Royce is up by 60%, which is actually really good. But again, not much in terms of actually putting in money. So that's not a huge return. It's only £9 return. Satona Al Khathar, again, not a huge holding. Aston Martin was a decent holding, and that's down by £768. Just goes to show that picking individual stocks, even in companies that you like, is not really a viable and safe option long term. Maybe ESG Global 19 shares down by 4%, not big. CrowdStrike, I had one share and that's down by 47%, which is a very big loss for one single company. Clover Health, another big loss, so that's down by £808. Cognite Software, another big loss, that's down by £758. AGM Holdings, yet another loss, that's down by £756. Fastly down by £724. FTSE 250 is doing incredibly well, so I had 11 shares and that's up by 13%. Alba Mineral, another big loss at £550. One Life, another relatively big loss at minus £416. Corsair, quite a big loss at £462. Baidu down by 16%, so this is where I would say it's not a huge lot to be down by. Baidu being a Chinese company and the tensions between USA and China, Baidu, however you pronounce it, has actually been doing really well over the past month. As you can see, it's gained 21% over the past month, and that is down by 16% or only £148. In my eyes, for 20% these days is not a big loss at all. Shoals down by 15%, so not too bad, so that's £140 loss. So now companies that are in the green, which is very rare to see green in my general investment account, because when I started back in around March 2021, that was the absolute peak of the market. Anything you buy then would probably be going down at least 20%. So Metro Bank has been doing incredibly well over the past 3 months. As you can see, 94% increase, meaning that if you bought back in October 2022, you'd be doubling your money, which is absolutely absolutely crazy. And even based on analyst predictions, that this company could be going to around £6 or even somewhere around that. So you could be still trebling your money if you invest in Metro Bank, provided that they don't go out of business and the cash flow and everything looks good. So I still have a bit of S&P 500, but what I've actually done, which is very naughty of me, is to sell a bunch of the S&P 500. So as you can see, yesterday I sold 1,501 shares in the S&P 500. This in my general investment account has yielded me a profit of around £500. And lastly, I have FTSE Japan, which still hasn't hit my break-even point. So I bought it around £9,000. So I'm still waiting for a few more pennies on the stock price to increase, and then I can sell my FTSE Japan. So what I was mentioning is that I actually did end up selling a bunch of S&P 500, and my reasoning mostly is that I'm a bit stupid. I just couldn't help myself. I do not recommend this for anyone because I think I bought the S&P 500 at a very, very good price of £6.54. However, looking at everything that is happening, I do think that the S&P 500 still is not stable, and there is going to possibly be small drops again. I know that past indication or any sort of future projection is not accurate in any case, but I was willing to sell these shares, and I sold these shares for an average of £6.91, which I thought at the time was quite high, and of course since then it's gone up again. But I do still believe in myself that I will be able to either purchase the S&P 500 for a cheaper price or find an ETF that I can just bulk buy and put all my money in. I could possibly change strategies and start investing into the German DAX, which I think going forward might recover quite a bit, because of course winter is finishing around Europe soon and the oil and gas problems haven't been as bad as previously predicted. If you go in to see the German DAX, one of my favorite ETFs, you can see that over the past 6 months there's been a huge incline. So the 16% gain on an ETF is very, very good in the past 6 months, and I think still going forward there is a lot of recovery to be made in the German DAX because of the reasons that I've said before. So even if I don't buy the S&P 500 again, I think it is a good time. It's a pivotal moment in the market, I believe, where paradigm shifts can be seen. So either the stocks are going to rally up, which in my case I will lose out on potential thousands of pounds, or stocks will momentarily go down and then stabilize. So I am trying to time the market, which is again not recommended. I am willing to take this risk. So it's very important to understand that this is all my own money. I don't put anyone else's money at risk. At the end of the day, if I lost a potential amount that I didn't gain, it wouldn't affect me in the same way if I made so much more. It doesn't really change my lifestyle at all. It doesn't actually do anything. I don't really care for money in the same way as most other people might. Therefore, I am willing to take all this risk. I am willing to put my theories to the test in order to see if I can make more money or less money. But of course, the end goal is always to maximize the amount of money that I can get in terms of returns. And for me, investing in this way is exhilarating. It's a hobby, and I don't recommend it for people who are trying to build wealth, because the best thing would be to actually just keep buying dollar cost averaging into ETFs, or even just one ETF such as the S&P 500, because when the price goes down, you're buying it at a much lower price, which means that you're just going to get more return when the price goes back up. On top of that, you're going to get dividends. And what I want to show you is that if I go to my account, in my general investment account, I have £10,389 to invest, and I'm going to be looking to deploy that, I think, within February to the end of March. I do think during this time period, we're going to see possibly some dips in the market as the world kind of comes to terms to the fact that we might actually be avoiding a long-term recession and all these other macroeconomic things. I'm definitely not an expert or a stock picking expert, but I am happy with the returns I've already have this year. So as you can see, this year up by 1,493. This general investment account is not very important because I aim to take all this money out of my general investment account and put into my ISA anyway, so it doesn't really matter too much. But let's now go into my ISA, see the returns from my ISA, and see the strategy in play in my ISA and what that has given me. So as you can see, my ISA value is £46,832, and this is my ISA maxed out for 2 years. So my gain has been exactly £6,832.90, which I think is really good. So that's about £3,000 gain per year on average. Actually a bit more than that, £3,416.40 exactly. I think I did it on the top of my head. So that's around a 15% gain each year. So I'm already happy with the gains that I've made. So that's why I say investment is personal, and it's up to you about the expectations of the return you're going to get. I'm already happy with my 2-year return, so I'm willing to take some risks in order to, have some fun and see if I can actually actually maximize the amount of money I have. So if I go into account, you can see I have a huge amount of cash in my ISA. So actually most of it is in cash, which means that it's not going to fluctuate below 46,000 because most of it's in cash. So right now I have £45,350 in cash, and in my general investment account I have 10,000 and odd few £100, meaning that I have £56,000 to redeploy into the market at a time where I think most stocks and most ETFs are really good value. So I think I can kind of justify what I've done now, because I think if I take some time out and really decide where I want to deploy all that cash, I can put it into an ETF that's going to gain me nice returns over the next 2 years. So quickly to go over my ISA holdings, not too many to talk about here. So Alba Mineral down by 54%, Master Energy 544 shares down by 82%, Amazon's been doing incredibly well with a return of 20%, Rolls-Royce up by 60%, Avaya Holdings up by 100% since I bought it. So I did buy it at 15 cents, and as you can see it has been fluctuating a lot. So at one point it was around 160%, FTSE All-World High Dividend Yield up by 3%, Aston Martin 49 shares up by 13%, VUSA, this is what I mean about the S&P 500, it still hasn't decided which way it wants to go. That is why I think there's still some volatility and some money to be made there. Disney has been doing a lot better this month, and it's been up by around 26%. Meta down by 30%, and I still have some S&P 500 shares. So these are the shares that I had originally, and I don't ever plan to sell these shares, so these are long-term shares. However, I have been having some fun with some other pot of money which has gradually just become bigger and bigger, and right now it's £45,000. So this size was a whole lot smaller before the beginning of the year, and it's just compounding by taking all these risks. So if I go into my activity, you can see that I bought the S&P 500. So I bought around 6,500 shares in the S&P 500. So these are the amounts that I bought it for, and as you can see these are the amounts I sold it for. So if you add it up, I made a profit of around £3,500, which in my case £3,500 is enough return for an entire year. So I've actually made my year's return. Now I can just see where I can put this money, and hopefully I can make up my mind to where I want to put my money long term, and not having to keep buying and selling, because at the end of the day, if you keep buying and selling, you're definitely not going to be making money long term. You're definitely just risking too much. You're being out of the market, in the market, you lose out on dividends, you lose out on compound interest, and overall it's just not a good strategy. I wouldn't recommend it at any time, but in this current period of time with so much uncertainty, I am willing to take the risk in buying and selling the S&P 500. Of course, we'll see next week if I am wrong, and I'm most likely going to be wrong, and the S&P is probably going to be rallying, which, you know, fair enough. I shouldn't have done this, and I did this, and for me it's more of an experiment to see if my thesis is correct in the way the markets are moving. If it's not, you know what, I lose out, you don't lose out. But that being said, as it currently stands, I'm very happy with the return on my ISA already. I believe that £3,500 in 1 year is a good return at this portfolio size of around £40,000. So I'm happy. I think no matter where I put my money in the next month or before March, things are going to go up regardless. I'm going to be making money the other way as well. And if things go down from now, I'm only in a better position to buy stocks. At the end of the day, I believe that if you want to make long-term wealth, you're just going to have to increase your income, which is something I'm working on. So regardless of if the markets crash or not, I'm going to be working on increasing my income to put into investments in order to see a bigger return. And the money I already have in these accounts, it doesn't matter. This is all in the past. I would have put it into a bank account anyway and made nothing. So that's why they call it personal finance. It really is about individual circumstances, individual expectations, individual long-term goals. I have many videos on how to actually invest in a more safer way for long-term wealth generation. That is not something I'm too concerned about. Of course, wealth generation and all that stuff is very important. I'm not going to make this into a self-improvement channel, but I work more on developing myself and my skills. So no matter what my financial situation, I am always going to be able to make something of myself. So for me, money is something that comes and goes, and it's a good way of thinking about it. And I think the way that we think about our personal finance really does change everything. I think personally, most people think about money in possibly a toxic way. You'll see a very common theme with all millionaires and billionaires. If they lost all their money, it's not the end of the world for them. They can actually regain that money, even their first billion, again very easily, because once you learn how to do it once, you can do it forever. So I personally think that changing your attitude towards your life, personal finance, and all these things can make a bigger difference than, you know, trying to time the market, investing, and all that stuff. So make sure to check out some of my other videos, and I'll see you in the next video.